There are lots of strategies out there in Forex trading. However, it's not a surprise that most of them suck. Today, I'm going to show you a great trading strategy with MACD and moving average that will perform well if you follow these simple steps. Enjoy. For this trading strategy, we will need two simple indicators, which is the MACD and the moving average. So let's add them to the chart. Type in moving average, it's inside built-ins, click the first one, okay. Now do the same thing for the MACD, built-ins, MACD, and this is the one we want. Now change the values of the moving average from 9 to 100. Once you do that, the line will change its direction. Now do the same thing for the MACD, go inside settings, and choose the signal smoothing to be 24. Once you do that, click OK and you will have everything you need on these charts. Now for this example, I'm using Euro USD, but you can use any currency pair you like. Now the first thing we need to identify when trading with this strategy is of course support and resistance. So we had a nice area of resistance over here. I hope we can all agree on this because every time it touched this area zone, the market went towards the downside, right? Now we also need the support, but where is the support, right? There was a nice consolidation area around over here, right? Although it did break out a few times, there was a nice consolidation we can see a few times happening in this area zone. However, now that the market has moved, we need to mark a new area of support just around this area zone, I would say. So now we currently have our resistance, support, and mid-range zone. That's what I like to call it. When it's in between the major resistance and major support zone is our mid-range zone, and very likely it's gonna bounce off this area zone, and we can see it has done so in a few occasions. Now logically, where would you enter your trade? Right, the moving average is trending towards the downside, right? So we want to short our positions. We never want to buy any position when the 100 moving average is above our candlesticks because it beats the purpose. The 100 moving average is there to show our trend direction, right? So we want to be a seller rather than a buyer. And where can we see our first selling opportunity? Well, we had a nice push of the moving average and went towards the downside and made a new low. As you can see over here, this previous area zone was consolidating and then had a nice bearish engulfing candlestick breaking through this area zone. And we can see also a MACD crossover line. As you can see, the blue line has crossed the yellow one, which shows bearish pressure and momentum. So let's say we would enter our trading position just over here, drag this along, and we have, let's say, 20 pips profit and 20 stop loss in this case. Just 1-to-1 risk to reward, let's say, because we are scalping the trade. So look at this position. It would have been a nice trade towards the downside. After we placed this trade, it suddenly pulled back, but it pulled back towards our area of resistance that we have, and also the 100 moving average line just coming across over here. We also had the MACD confirmation. It went towards the downside after a pullback, and look at this. It would have been a nice trade towards the downside. It would have probably been around 15 pips profit, which is nice. But you could have just kept this trade open and hopefully find more trading opportunities, which we do. So where can you actually enter the trade yet again and be profitable? The MACD has now crossed this moving average opposite. As you can see, the blue line is now below the yellow one over here, which means we can take a trading opportunity if we find one. So where can we find a trading opportunity from this area zone? Well, if we have a look, it's a nice bearish engulfing candle over here, bouncing off our mid-range zone that I talked about. Moving averages, so let's say we do 20 again, 20 again. Let's say this is our second trade we place, right? So we already have 2 trades open. None of them are closed off. None of them have reached our take profit or stop loss level in this case. And as you can see, this would have been our second entry. You could have potentially even entered yet again on a bearish engulfing candle over here and even here. So you could potentially place 3 trades in around this area, because all of these 3 trades confirm the market direction. They are bouncing off the mid-range zone. The moving average support of 100 is over here, and the MACD indicator has already crossed since this area zone. So these 3 trades could have been very good and profitable opportunities for you. And as we can see, the market has crashed down and went towards the downside. Now, where is another trading opportunity that you want to enter on? And very likely this is the big one, and most people miss the big one. So what I usually do is have a look at the overall chart. And as you can see, the lowest it has been was this area zone. Now, if we use the horizontal line tool over here, this was our previous low, right? This was our lower zone, but it has been crossed with a bearish candlestick. And once again, pulled back, and a bearish engulfing candle closed lower than this area zone. Once it crosses into a new lower low, this is a great trading opportunity to go short. Personally, this is where I go off and place a big lot size trade, let's say 10 lot size or more, because that's when it's a perfect opportunity to do so. And we have our stop loss just above the moving average, but our risk to reward ratio we want to have 3-to-1 at least in this occasion, because it's crossing into a new lower territory. We can see the same thing happening from this candlestick and this one over here, right? It keeps giving me a bearish engulfing candle. It's bouncing off the mid-range zone once again, and the 100 moving average is over here. The MACD has already crossed. It's very likely a good trade towards the downside, because the candlesticks have made a new lower low from this area zone, right? So let's see what happens now if we play the tool. And as you can see, it continues to drop down, but where do you actually sell off your trade? We need another moving average indicator. Go inside the moving average. There we go. Type in, click on it, and change from the value of 9 or length to 25. This moving average will tell us when to stop chasing our trade. So look at this. It continues to move down. We keep it open until it starts crossing the moving average. So what do? We wait, and can you see it over here? It actually crossed just over here on the 5-minute time frame. So your take profit level would have been around here. So 46 pips profit simply by following this trading strategy. Obviously, you could have placed the numerous trades I talked about earlier in this video, and it could have been around 5 profitable trades, but this is the one I would have taken 100% without a doubt, with the big lot size trade, because it has so much trading opportunities, resistance, support, mid-range zone, right? Bearish engulfing candlesticks are confirming trades towards the downside. New lows started happening from this area zone. Bearish engulfing candles as confirmations we are moving towards the downside, because there's push exhaustion, push cycles in the Forex market. So if you do enjoy my videos, make sure to watch this one. This one's really good.